Nick, welcome to our show.
Thank you.
It's great to have you here. We don't really know what to call this because
Mhm.
basically it just came from finding smart people who have great things to teach and getting them in front of other business owners so they can learn. So that's a long title. So we just kind of say the show.
All right.
So Nick, this has been a bit in the work. We booked this a couple weeks ago, and certainly things have changed a lot. Since the beginning of May. But at its core, small businesses are still. Some of them are open, some of them are closed, some of them are planning to be open, some of them are not. So there's a lot still going on. And what's it like in your neck of the woods?
Yeah, with our business, it's a mixed bag as well. However, so we did probably down a third of our business in March, right?
Yep. Yep.
So we provide virtual EAs and bookkeepers to companies, and if they're going to lay off some people temporarily because of COVID, then they're going to look at the contractors before they do their full-time staff, which is fair. But as of May, the conversation has become much more positive. So we've gone through our shock, defense, what do we do? Now that we've put those things into place, people are starting to talk about, all right, time to plan, time to look at offensive moves, right? So
Right.
our conversation has been a lot more positive in May, and a lot of clients coming back and a lot of new clients. So it's very encouraging.
Awesome. And we'll get into definitely and towards the end some of the things that your company provides. And we actually have another interview with your partner coming up, talking about some of the how to hire an EA or a virtual assistant. What kinds of things can they do for you, and how can you use them to leverage your business? So I'm excited to hear more about that. So before we get started on kind of the cash flow conversation, I just want to remind everyone who's watching, please jump on the comments. Say hi, ask questions. If you have a scenario that you'd like a specific answer to, pop on there and ask. And it's much better for us to answer questions that we know you guys have, and we think, we do our job trying to come up with the scenarios that we think you might want to hear about, but I'm sure you have something that you might want to know. So we're happy to take those questions anytime. Or comments. If you want to make a comment about what we're talking about, it might help improve the conversation. So let's get started at the beginning. So how did you get to where you are today, working with small businesses, entrepreneurs in this field?
Yeah, so owned another business prior to this, several other businesses, scaled them up using some of the concepts we'll probably talk about today with cash flow, but certainly other business concepts. Scaled them up and exited from them. And through that process, became a business coach as well. So I do coach executive teams on all business aspects, particularly strategy, vision, and planning, and also on I explained to you earlier, I'm by no means an accounting professional. I learned most of the concepts through the School of Hard Knocks and the association that I belong to, Entrepreneurs Organization, for the last 20 years. And however, I believe that there's a better way of talking about things like cash flow. I think it's a great topic with more English than Accountanese, right? So I'd like to share those concepts with other companies.
Right. So you had a business, like, did you have it for a really long time and then you moved into this, or was it something that you were working and then you kind of sidestepped into becoming an entrepreneur? Or have you always been an entrepreneur?
No, that was business I started and scaled. So that was my first entrepreneurial foray into the real business world. I had other small things I did when I was younger. Grew that over the course of 20 years, from started with 5 employees to 350 employees, offices across North America. And then I retired from that business in 2017 and joined my partner in this one.
Oh, nice. Yeah. So you've had you've had a lot of time to go through all the ups and all the downs, the recessions, the booms, and everything.
Absolutely. Absolutely. I was lucky enough to have a network to help me through some of the hard times, and then some I had to make those mistakes myself and learn those hard lessons myself. So
yeah, that happens a lot.
Yeah, for sure.
So we wanted to talk about cash flow because it is kind of the thing that can trip people up. I know that a lot of times you get your reports from the accountant and it says, oh, you made all this money this year, and you're literally looking at your bank account going, I don't see any of it, right?
Yeah.
And also, like, your P&L is great, but it's not taking into account some of the other cash things that are coming out or going in, but mostly, let's be honest, coming out of your bank account. So it's somewhere I feel like it's one of those basic skills that small business owners, it's like a muscle you need to develop, how to manage your cash flow. So when it comes to cash flow, kind of, let's start at the beginning. Why not? Let's just talk about what it is and let's just move through some of the kind of finer points here.
Okay, absolutely. And one of the things that kills me the most when talking to small business is that they manage their cash flow just literally from their bank account. And so they look at their bank account at the end of the month and go, hey, we did well this month. And I'm like, oh man, that is a dangerous way to manage your business, because there's no forecasting, there's no budgeting. You're not looking forward to any planning. You're just looking at what happened in the past month. So typically there's lagging and leading indicators, and a lagging indicator is your P&L statement and your financial statement at the end of the month or the quarter, however you get reporting. And that's what's happened up until this point. So that's lagging. So that's great to know, but we need to look at some leading indicators of what's coming up. So we can use some of the information, as long as we have some history, some historical data, to say, okay, here are some trends. September, always slow, right?
Yeah.
So we need to make decisions now in how we're spending money and how we're collecting money in order to have better cash flow in September. So looking at the sort of the data trends, if you will, on your statements is very helpful to say, okay, we know there's a slow time coming up. We need to make decisions, or maybe not spend as much, or maybe work on, hey, how are we doing on the collections, or how fast are we collecting, and can we speed that up in order to get more cash for those downtimes.
Yeah, and so what about people who have a business where they maybe have accounts payable, like they're charging, let's say they've got terms with other companies, they're buying their stuff, but they're actually collecting in the moment. They're not extending credit to any of their customers, like a clothing store or anything else that's kind of point of sale related. That's not my world. So how does cash flow work in those businesses? What are some of the challenges that those types of businesses would have?
Yeah, so typically in a business like, let's say retail, right?
Yeah.
So retail businesses, we collect money when they come into the store and actually purchase something, or online right now. But we've typically had to purchase those goods in advance. So that cash is gone until we make that physical sale. Okay. So what are some ways that we can reduce the payable cycle? For example, seeing if some of the suppliers will do consignment. They'll give you the goods and you pay for the goods as you sell them. Okay, right. Walmart's famous for that. That's how they grew their business. They don't own anything in their stores. The vendors do. And they'll pay the vendors when they leave the shelves. So there's techniques you can use to maybe shorten that payable cycle, because you're carrying that inventory now. The other thing is inventory turns, right? So that all relates to cash flow, is how fast are we from the time we pay for the inventory to the time we sell and collect for the inventory? Can we turn that as fast as possible? And what are some techniques to turn that faster so that, again, that cash flow starts to generate much quicker?
Yeah, whenever, like, I'm a sucker for a good business makeover show, and I watch a lot of, on CNBC, there's one, The Prophet, and almost every time when he goes into a business that sells stuff, there is a basement full or a closet full of product that they bought that's just sitting there, and it costs money to put it in their store, and they've never sold it. And that scares, the idea of inventory scares me, and that's not my business. So I wonder sometimes how they handle that.
It is scary. In our last business, we did deal with inventory. It was a part of our business. And you want to have the fastest turnover possible, with the least amount of back orders possible, right? So you want people to be able to get their goods immediately, and there's a delicate balance between the two. Because if we have too much inventory, great, our clients can get it anytime they want, but we're getting stale inventory, right?
Yeah.
And that's a bigger thing as technology progresses and our buying trends continue to change quite frequently. So
yeah. So the other side of that, so customers that like us that we offer terms to our clients to pay in hopefully 30 days. That's the deal. Is that is that a harder thing to do, or is it just a different challenge to be able to manage it that way?
Yeah, it's just a different challenge, and part of, I mean, all of business is about developing good habits and strong processes. So collections, invoicing and collections, it's a process, and we have to develop good habits. So there are tricks in order to get. So let's say we have net 30 terms, and we often hear. Well, we have net 30 terms, but we typically collect because our clients don't always pay, and you tell us they pay 45 days or 60 days or even 90 days. Oil and gas is famous for, no offense. So they say, yeah, well, our terms are net 30, but our average receivables are about 60 days. Well, there's some techniques and best practices to use to collect faster. For example, having a protocol. So at 30 days, there's a reminder. At 40 days, there's an email. At 50 days, there's a phone call. At 60 days, it escalates to, management, whatever that is. Having a protocol of communication, because quite frankly, especially when times are difficult, people are going to try and collect faster and pay slower. Right, and we've been through a number of depressions, economic downturns. That certainly, I call them depressions because it's depressing, but economic downturns where people start to slow their payments down to their vendors. So things like a live phone call that gets their attention. Now there's a voice behind that invoice. Right. And things in writing, and there's some collection techniques where making sure the exact PO reference that they need. Your invoices look like their payment system, right?
Right.
So there's some techniques like that to speed that up, but it's all about good discipline.
Yeah, I remember about 15, 20 years ago, a business owner in town, Kelly Montgomery, he gave me two pieces of advice. One was on hiring and firing, and the other one was on collections. And he said, it's your money. People are using you as a bank. Don't let them. And that always kind of stuck with me, but it took a really long time, even though we knew better, to actually take action on that. And ultimately, I actually hired a virtual assistant. And that virtual assistant, their job is to literally chase down our receivables. And it probably cost me, $200 or $300 a month. But I'll tell you, 2008, when we went through that recession, we probably had over $120,000 in outstanding receivables. Oh, wow. And now this time we maybe have 30. Oh, right. And they're all collectible. That's how I look. They're all collectible. At 120, there's quite a few that we probably had to write off. So I would say the biggest change for us has been we created that process, and then I hired someone to do it, because as a business owner, it was always on me to fit it in, and it would never happen consistently. Right. Even sending statements would never happen consistently. So
here's another thing that scared me, was learning the fact that for every day that passes past due, for every day that passes, your percentage ability to actually collect those funds drops dramatically. So that's scary, right? Yeah. If you think about it. So every day that it passes past due and you haven't collected it, the chances of actually getting it are dropping. So we need to get on that as quick as possible. And I admire your thought process for putting all that in place, because that's exactly what we need to do. We can't just leave it to a piece of paper or contract that says the term. It doesn't work.
The other thing in our business is, and I don't know if a lot of businesses can do this, but we get deposits under certain conditions. And so even if someone has an account with us, if it's more than a certain amount of money, because our cutoff is $1,000, they still have to put a deposit down. And I'll tell you, when we first started, that was really tough to do. It was tough to ask because you felt like you were asking for something that you didn't necessarily deserve. But at the same time, you're about to outlay money for materials, money for time. And, and it's that idea that they're invested and you're invested, right? But as a business owner, like no matter how many times I was told, get a deposit, that was a really tough ask. But I trained my employees to ask, right? And then all of a sudden things started to change. So I don't know, like, do you think that there's some businesses out there that should be maybe getting those types of deposits and they're not, or is it not really applicable to many businesses?
Oh no, it's definitely very smart, and it's a smart tactic because if you think about it, we get asked for deposits and we're like, yeah, okay. So it's just a part of doing business, right? So if we're like, yeah, that makes sense, okay, then absolutely. And sometimes you do get kickback. They say, well, we typically wouldn't do that. And you say, okay, well, instead of 50%, how about 30%? And then 30% on delivery and 30% on terms. And if you do really well, we'll start backing that out over time, especially with new relationships. Most people get that, right?
But sometimes there's also that pressure, I think, with you got a new client, it's maybe a big job and you want to get it. So then you say yes and you don't ask for that deposit because you're so happy that you got that customer in that job that you don't want to sully the relationship by asking money. But that's probably the wrong way to go about it.
Hey, listen, just like dating, it's been a long time since I dated, but just like dating, you got to set the expectation up front, right? This is who we are. This is who we are. So if you set that expectation up front, it won't burn you later, right? When you go, well, I know we've been doing business for a year, but now I need a deposit, right? Set those expectations up front. People, I really can't recall many, if any, times where people said, nope, not doing it, not doing business with you. And sometimes they push back to say, well, your competitors don't ask. Well, then maybe you have a good answer why they should be working with you over your competitors anyway, right?
Yeah, maybe you're not as convinced about your USP and the value that you're bringing to the table, and that's too bad because I think that a lot of times we undersell ourselves a little bit, right?
Yeah, exactly. Yeah, it's confidence, right? So at the beginning, I landed this really good client. It's going to be, impactful for our business. But I just want to show them all the good stuff. I just want to do anything that they need because I don't want to lose them. We need to be confident in our USP and our brand promise and what we have to bring to the table so that we can say, I am going to love working with you, but you are also going to love working with us. Right.
Yeah, exactly. So advice for people right now that are being paid delayed because the companies that they have worked with are trying to manage their cash flow, and those companies are like, it's a chain, right? What do you think right now in a tough situation or in any kind of situation where we have a downturn? Do you need to change what you're doing or your technique? Do you need to like move those dates up, or is now a good time to sit down and like, if you don't have a system, like, our system used to be, oh my gosh, payroll's in 5 days, we better start calling, which is a terrible system. I'll admit it was awful. But like, what would someone do right now to change that circumstance? Because you might think, well, they don't have any money or they'd pay me. Is that true? Or are they really just squeaky wheel here gets the grease?
Yeah, it is a bit squeaky wheel for sure, but it could be either. So a couple of things. If we don't have a solid process in writing that people follow, and it's like 15 days, 30 days, whatever that is, develop that. Now's a good time to develop that collections workflow. How do we invoice? What do our clients need on our invoices so that they don't... Couple of things that I hate getting back is, well, we need you to redo the invoice because it needs to be in this order in order to get into our payable system. And I'm like, we should have known that before. So we ask the questions at the beginning of the relationship. How do you need your invoice to look so that it gets into your system and you don't have to be chasing us and we don't have to be chasing you? So that's one thing. The other thing is we didn't get it. Really? Right?
Yes.
Really? So we didn't get it. Send it again. Send it again. Send it again. So at that point, it's, we have to ramp up our communications, right? So a phone call is very effective because now it's personal, right? And so they're like, I'm getting phone calls, right? So we have to ramp it up. So first of all, make sure you have a good process in writing, because as we grow, we're going to have other people doing it eventually, and this is our tried and true, and we modify it based on our experience. And secondly, ramp up the communication.
Okay.
Right? Get more personal with it, and we're doing it right now. I'm making phone calls, right? I have other people that normally collect, and I'm making phone calls right now to say, is everything okay? How's your business? We're looking for, our business is suffering too, and we're looking for our cash flow, and I get it, and we're having those conversations right now, but I normally wouldn't make those calls, but in this time it's necessary.
Yeah, my husband will be like, okay, so do you know why you got me this time?
Yeah, right? Sure.
Because you have not answered the 53 emails and 5 phone calls or whatever it is, right? Like we save him as the big guns or whatever. But do you think that maybe right now people tend to instinctively go the other way and stop communicating, thinking that they're going to be bugging them or harassing them, or they're also nervous, so they don't want to like threaten the business relationship going forward? But the reality is if they owe you money, like they owe you money. Like it's not personal, right? If it's personal,
if you're a salesperson at heart, right, and or come from a sales background, that is difficult to do, because when you're in sales, it's all about developing the positive relationship. And when it comes down to, I got to ask you for money, it's gut wrenching, right? Yeah. But you got to understand, you just provided a ton of value. They took it. They owe you, and that's only fair. So you kind of got to get over that, right?
You can't walk across, you can't go fill up your tank at the gas station and be like, hey, so yeah, I'll be back next week to pay for that. And will you give me 5 cents off? Like that's
right. Yeah, exactly.
The worst, right? Yeah. And what about other techniques? Like, we've had some success with saying, okay, well, if you can't pay the full amount, can you give us post-dated checks? Can you pay smaller amounts more often? Or, or even do you think that there's some value in just the momentum of being paid a little bit, even if it's not exactly what you're needing? Or
for sure, there's always room for negotiation. So, we had one client last year that said, hey, so this is before, BC is now before COVID. Okay. So it was before COVID, and they said, listen, we're having financial problems. We can't pay you. Okay. And I'm like, that's it? Maybe we can't pay you yet. That's all it said. So we contacted them, says, okay, you said you can't pay us. So what are the circumstances here? And we ended up negotiating payment terms over the course of, I think it was 10 months. So we broke it down and said, okay, 10 payments, and they agreed to that. And they were at our last payment this month, actually. And so they haven't defaulted on that. Actually, in the middle, we didn't get it on the first of the month. So I called them. Yeah. And they're like, oh, right. But then it kept going. So we got our money. Now it's painful because we could have used it all last year when it was due, but we got our money. Right. Yeah. So not to accept just whatever, can't do it now, or we'll tell you when we can. It's not acceptable, right? You have a business to run, you have mouths to feed, so you have every right to stand up to collect that money.
And what about either offering or using, someone mentioned here, net 30 with a 2% discount if you pay before then? Like, is that something that is worth the management time of, or like what would you recommend for the average small business owner if they're offering terms? Is that enough of an incentive to improve their payables potentially?
Yeah. So what we've done actually, because we have, we're providing a service, an ongoing service. And so we actually have net 15 because we have to pay contractors, but we only bill once a month. So there's an incentive for our clients that we only bill once a month, which means you get all that work for 45 days for free, but we have to pay our contractors too for that month. So we said net 15, but our interest rate is 18% per per annum, right?
Okay.
So, and we have clients that come back and say, well, that's really steep. And we're like, yeah, but we're giving you the advantage of not paying for 45 days that someone has done work for you on the first of the month. So it's a balance. Now we could, if you like, invoice you twice a month and drop that late payment. But as soon as that late charge, so again, it's a negotiation, right? So we said, okay, so there's terms and there's price. Those are the only two things you can negotiate on. Price goes up, terms get a little longer or harder, right? Price goes down, you can pump up your terms to be more advantageous. There's really only two you can negotiate. So by all means, you have every right to say, okay, if that doesn't work for you, we just said, okay, well, we'll invoice you. How about we invoice you twice a month and we take some of those late payment terms off, providing you're, and they're like, no, that's okay. We'll stick with the once a month and the term. So, you know, they saw the advantage because we said, we are delivering this to your advantage, so we need this in return, right? We're exchanging goods and services for payment. So.
Well, you mentioned oil field specifically briefly at the beginning, and I mean, this is, you know, Alberta, so you can't, like, there's no way you're not affected by the oil and gas.
Away from it.
But for people who are dealing direct, you know, certainly you'll hear things like, well, we don't pay interest, or, you know, we pay a 90 days, or that sort of thing. So, I mean, I know on our side, like, we've turned down business if that's their terms. We're just not interested, or we'll increase the price, you know, relative. But what kind of, like, how do you deal with the we don't pay interest situation?
So again, it's a negotiation point, right? Terms, price. So if they want better terms, our price goes up. Right? It's just teeter totter. So, you know, if you want better terms, then our price goes up. If you want, if you want our price to go down, our terms will go up. Right. And so we negotiate based on that. Okay. You don't pay interest. So we definitely have had clients say, okay, well, we don't pay for 90 days. Right. And we say, okay, so our terms are, you know, back in the business when I was selling to oil and gas. So we said, well, our terms are net 30. So there's a big gap in between that. So then we could require 50% upfront and do the other net 90. How does that work? Right. So there's a negotiation that's had there, and not if a client says tough luck, we say, obviously you don't match our core values of partnership. So I don't want to, as tough as it sounds, maybe I don't want them as a client. If they say, yeah, we'll work with you, I'm like, they have a partnership attitude. That's part of our core values. We want to work with them and work something out.
And when you're hustling for every dollar, sometimes that connection falls. I've experienced that. It falls by the wayside because you're just so focused on building and building and building and building and saying yes to everything that you don't have that internal check that goes, ooh, this is going to be bad.
And at the beginning, when we're starting a business, we have to say yes to everything because we need every dollar we can. But that's where you learn the lessons of, okay, next time, now that we've grown a bit, next time I'm not going to say yes to them and them. The rest I was good with. But we got to learn those lessons. But we do have to hustle for every dollar at the beginning, and there's nothing wrong with that. We just say, okay, as we grow, now we can be a little bit choosier, right? You know what I mean? So, well,
and things change, right? Like 10, 15 years ago, you didn't see everybody with an expense card. Whereas now, like someone will say, oh, well, we could never get a deposit from that big company. And, it's like, actually, now their employees tend to have these expense cards. So it's actually easier to get that 50% deposit than it ever has been, right?
Right. Yeah.
Or some of these oil companies, like if you can get on their EFT plan for payment, you can get paid in 15 days in some cases. It's crazy fast in some of them.
Yeah, getting in their system was something that was one of our techniques. Is we made sure, what's your system? We'll get into your system, however you need it to look. And so some of them look totally different. But it means like that payment was, they were paying net 10 a lot of times. So it was very advantageous to get in on those systems. Yeah.
I can remember in the 2000s, I can't remember when there was a postal strike, and everybody was kind of worried because like most of our money comes in by check at that point, right?
Yeah.
And so if you can't get mail, you can't get payments. And so then there was this push to going away from checks. And that's just, in our experience, that's just kept going and going and going. So anytime someone sends me an EFT form, I'm like, fill that sucker out, like right now.
Yeah.
And e-transfer and all these other payment methods have really made getting the money so much easier than it used to be. So it's like you feel like a juggler. Which way do you want to pay? Do you want to pay online, in person, by check, EFT? Like I got everything but American Express. We don't do that one.
Yeah.
So we talked a little bit, and we found a connection before this that we didn't realize was around the whole idea of profit first. So I'd love to chat about that because we had Mike on and interviewed him a couple weeks ago.
Awesome.
We kind of talked a bit about profit first, just in the context of his new book, which it dovetails into. But the whole idea of a company being profitable. So, you get your year-end books and you look at your report and they say, oh, you owe this much in taxes because you made all this money. And you're sitting there as an entrepreneur and owner going, but none of it came to me or went into my pocket. And there's that idea that, like his whole concept is, sales minus profit equals expenses, not sales minus expenses equals profit, right? Like you just flipped it around to say, take the money off the top, essentially, right? And so have you, like, you're a fan of that and you understand the book but have you done that with people?
Yes, absolutely. And so one of the first things, we'll back up a second. One of the first things that I did is, and to this day, I use some of the concepts that my mom taught me when I was a teenager on how to account for, my spending and my income. And she had me, this is before I even learned that Excel, so it was on paper, but then I transferred it to Excel, and now obviously it's a bit more automated. But what she did was say, okay, you take your income and here are all your expenses and here's what you have left and what are you going to spend it on as a teenager. But she said, my parents told me every dollar of profit after your expenses, put half of it into a savings account and the other half is what you can spend. Like when I was a little kid, and we're going way back, they would give me 50 cents a week I was just talking about this the other day, so I'm happy you brought it up. 50 cents a week was my allowance, right? So, I mean, I was young, like under 10, and they said, we'll give you this 50 cents every week. A quarter goes into your piggy bank and a quarter is for you to spend on a bag of candy at 7-Eleven always, right? But right from there, I learned take half, put it away. Right. And that's the rainy day fund, right? That's the car breaks down fund or, COVID hits fund, right? So I took that concept with me through life, and thank you, parents. I was going to look up, they're still alive. But thank you, parents. Because that concept of stowing some away for when you need it is true to this day. So we took that and said, so now in business, when I'm starting a business, the first thing I do is calculate what is your break-even point, right? Every month. So you have your break-even point, and then you say, okay, that's our break-even point. We know what we need to make that month in order to start making money. And so I kind of took the profit first and said, okay, take that concept, but I want to know, when is the point that I actually take money off the table to make it profit first? And then I took that break-even point and I said, oh, profit first. Why am I doing break-even? What I should be doing is taking the profit at the top line and then doing my break-even after profit. And it actually changed the whole way we did our business. especially
Okay.
when it comes to a time like this, because you
Right.
can say, I can keep that profit line and change all the other variables, and now we're
Right.
sustainable. Profit is not a dirty word. We need it in order to have sustainable businesses. And sometimes we're ashamed to say, oh, we made profit on that, and yet we still had to cut some people, right? We need to
Mhm.
be sustainable. So back in 2008 was the economic downturn at that point in time. We said, okay, this is going to hit us. It's not hitting us now, but we're seeing all of our clients get hit. We need to make some adjustments to that right now. So we went down to a 4-day work week. Everyone took, 80% pay. I dropped my pay. Obviously, I didn't go down to a 4-day work week. I probably went up to a 7-day work week, but I said, I'm going to do the same thing. So we're all hurting the same.
Yeah.
And we took some money off of the line so that we could keep a minimum at that time, a minimum 5% profit always,
Right.
because that's what it takes us to reinvest in the business. Nowadays, we're told should be more like 10% because
Right.
things are churning a lot faster.
Yeah.
So that concept really helped us get through a few tough times, including right now.
Yeah, absolutely. And he in the book he definitely delves into a lot of examples, which is very, very helpful. For me, what I struggled with is most of his examples were businesses that weren't offering terms, and they were kind of based around bank account, like you mentioned, bank account, cash flow, project, like using your bank account as your how am I doing, right?
Right.
His we had gotten into a lot of trouble when we subcontract big jobs, and then you get this deposit, and then, oh, but I need money over here for this, and we ended up, really shooting ourselves in the foot in how we were managing that. So the money looked great. It like, oh, we have all this money,
Right.
and so what I struggled with was really that idea of using the bank account, because I had disassociated myself from it a long time ago, knowing it was telling me lies, basically. And so, I moved into more of a cash flow tracking system so that I could see my ins and outs and what payments were coming out at what, time of the month, and what little bit of difference it would mean if I collected, $4,000 more in a week. What difference does that make? And I could see it in a real visual way. I'm also lucky that I have a mom who, hammers home certain financial concepts and holds me accountable.
Yeah.
um, but the idea of when do you get paid as an owner, not paid for doing the work in the business, but like paid as a shareholder, right? Like we lip service the word shareholder, but
Mhm.
when have you ever gotten a profit payout from your business? I doubt that most people have ever experienced that, right?
Right. Yeah. And it's sweet when you get to that stage, for sure. But it takes a long time to build it, to get there. And very often we are taking the financial hit for the sake of the business, right?
Mm-hmm.
And that's part of what a lot of non-entrepreneurs don't understand about the pressures. They just see, oh, you have this great lifestyle and you can go on holiday when you want. And the irony of becoming an entrepreneur is we become an entrepreneur because we want control and freedom for our own lives, and we're actually locked down even tighter, right?
Yep.
So we do make those sacrifices. Again, good practice, solid processes we build up over time, and we learn some of the hard knock lessons, and we become smarter and more nimble. And over time, we do say, hey, because of these good practices, we've been able to build even more profit. There might even be a dividend payout at some point over and above, which would be fantastic and well deserved.
Yeah.
So I was lucky enough to get to that stage as I built my company, and it is exhilarating, and that's what sort of makes it become. I paid off my parents' house for them because of it, and it was an exhilarating moment, right, for our family. So it's definitely out there.
And I would think that no matter how big your business, that whole idea of a profit, even if it was $10 and you went and bought a coffee, right? But you knew that $10 was yours to spend, that you had earned it, And, and then next time it's $25, next time it's $50, and it accumulates. You buy a hot tub, or you go on a trip that you could never afford to go on before. But your business, it's like guilt-free. You earned it. You've invested. Your business is permanently profitable. That idea of becoming permanently profitable, to me, is such a great one. But I think that if you don't double it with the good habits of actually choosing to reinvest or pay out those dividends, you just keep on that hamster wheel, and you just keep working and working, and you wonder, what is all this for? Right?
Yeah, absolutely. Is it Robert Kiyosaki that talked about you can become a millionaire, and what was the compounded interest, $1 a day? It's like 8 years or something like that. You can become don't quote me, but you can become a millionaire by just investing $1 a day in a good interest bearing account, and that compound interest is $1 a day, right? That used to be a Starbucks coffee. That's not even. That's the lid, right? Like you can't have a shot of coffee now for that. So those good habits will yield dividends down the road for sure.
So is there any advice kind of you would give the average small business right now? I mean, yes, we're in unprecedented times, but we've seen downturns before. This one is not acting like a normal downturn at all. And we still have so much up in the air. I mean, everyone's in a different position. Maybe you're shut down completely. Maybe you're working from home. Maybe your business is just reopened, or maybe it's been open kind of the whole time. But what kinds of overall pieces of advice would you have for the average small business right now that they could use?
Yeah, so lots of conversations with entrepreneurs in the last couple of months about this.
Mm-hmm.
Typically, what happens is, there's I'm going to use defensive and offensive terms. So BC, before COVID, there were these things called sports, and they had this term, and one was offense, one did. They used to get together and actually physically touch each other way back when. Anyway, when something like this hits, we have to get into defensive mode, and we have to batten down the hatches, and we have to do what are all the tactics and priorities we can do right now in order to survive. And then once we've got that, then we need to look at some offensive tactics, because if we just stay in defensive mode, right, we're going to continue to get hit by the ball or the puck or whatever, and eventually we're going to lose the game. So we have to be offensive as well. So then it becomes, what opportunities are there? I've seen so many businesses pivot in the last 3 months. It boggles my mind. Businesses that I would have never believed could make it through. Right. And we're seeing businesses that are shutting down because they can't make it through. And that's fair enough. But there are opportunities out there to pivot and change. There's a friend of mine who has a retail business, stores in malls. And she said, we laid everybody off but 2 people, and we need to reconfigure what we're going to do. And she eventually went back online and had a really cool local small business owners were modeling her stuff, and really neat online way of doing it. They deliver right to your door. There's little personalized notes, like really cool. And I said, so that's a great pivot. Do you think you should have probably done that prior to COVID, right? They should have been part of your business model. He's like, yeah, it just pushed me into it. Right. So there are opportunities out there that we need to do some brainstorming and some collective intelligence with, our networks to say how can we capture these opportunities, and what do we need to do to change to. Some of it's small change, some of it's huge, but there's opportunity out there. We just got to, turn over all the stones. So that's the offensive. What can we do to move the business forward in a new and unique way? And you're seeing a lot of that right now. So that's definitely something. We don't want to get defensive and then put our heads in the sand, because, coming out of this, a lot of prediction, business will not be the same. It's a 9/11 event, right? So 9/11 changed travel forever. Right. So we're being told this event will change business, the way we're doing business, forever. And I'm seeing, talking to a lot of business owners that are saying they've pulled their staff. at the BC, they had 95% worked of hours were worked out of the office. After, the staff are telling them they don't want to work more than 50%. They want a balance between home and, well, that's going to change the whole, commercial real estate game, right?
Yeah.
It's going to change the way offices are set up. It's going to change, shared workspaces. Things are going to be different. So we need to look down the road and say, how can we capitalize on that? Right? And up our game.
Yeah. And that's definitely, people laugh about the word pivot, but gosh, we've seen so much creativity and originality. And I agree, like small businesses sometimes hang our hats on, we're local and we're small. So that means, I guess, that we have to accept a higher barrier to do business with them, because they make it harder to find out when they're open or what their sales are, or like when, like their stuff being online. Whereas now they really have had to step forward and remove some of those barriers and make it easier to do business with them.
Yeah, absolutely. A friend of mine said, it's not even a pivot. He says it's a shivot. And a shivot it's a half shuffle and a half pivot, right? So he's calling it a shivot. So I thought that was unique.
You're going with that.
Yeah.
Oh, that's funny. So let's talk a little bit about your guys' organization, because it is something that most small businesses may have never, ever considered. I mean, certainly bookkeeping, yes. Almost every company will have a bookkeeper if they don't do it themselves. Right. That's a given. But, maybe they haven't gone virtual because they're still, walking in with their box full of paper and handing it over. So maybe that's one kind of part that's probably an important mental mind switch. But then the other part is this whole EA side. So I know we're going to get into it in detail later, but why don't you give us a tease of kind of the impact that your services can have on a small business owner and how people can leverage that?
Yeah, thank you. The way that this all came about is, again, through working with lots of companies through Entrepreneurs Organization. And these are all scaling companies in various degrees. And what we noticed was that people were always talking about hiring and firing and HR management and moving. If we're growing, we got to move people into different positions and create new projects and new responsibilities. And we understood that it was one of the hardest barriers to scaling a business up, and especially quickly. So a lot of entrepreneurs that we work with, when you start your business, you're everything. Right? You're the cleaner, the cook, the ball, you're everything. And as you scale, you have to start to, shuffle off some of those duties. But you still have to manage your emails, manage your calendar, make appointments, because you've got a lot of people that, want your attention. And that all takes away from you working on your business. Right. So we recognized that, and a friend of ours said, hey, I hired this virtual assistant, and this virtual assistant does all, makes it so that I have to check my emails a total of 15 minutes a day. Can you imagine?
Yeah.
15 minutes a day. That's it. All the important stuff. All the other stuff is delegated or in other folders or dealt with in different ways. They manage their calendar. They do all sorts of project management. And they basically just help it so that the entrepreneur, the executive, is free to actually do what they do that brings the most value to the company, right? Is work on the business and helps it grow. And it changed my life. I said, that's interesting, because I was told a long time ago, you need to get an assistant. So a long time ago, when I was at a stage that I could afford one, I went through the hiring process and I hired an assistant, and that assistant eventually became our manager because she was so good and managed me really well. And I said, it literally changed my business life, because I could then go from spending 10% on the business to spending 90% growing the business. And that's when we really took off and grew very fast, right? Because I could spend my time on it. And so I said, that's interesting, because that happened to me, but it wasn't virtual. It was in the office. And I said, but I had to wait for years until I could afford someone full time. So we looked into that and said, we can help entrepreneurs scale by having a virtual executive assistant that could help with all the same things, but they don't need to have we've already hired the A players, right? We've already, sifted through hundreds and thousands of different people to get to the real quality EAs. So that's not going to be an issue, the hiring issue. We have backups. So if they're on holiday, someone else steps in. So you never have to worry about vacation or sick or all those HR things we have to worry about in the office. And if they're only working an hour a week on your emails, that's all you pay for. And so you can scale that service up and down. I need more, I need less, doesn't matter. Right. So it becomes very scalable, and we said, well, let's try it out. And it's done very well in our eyes anyway.
Well, if people have read the Tim Ferriss book, The 4-Hour Workweek, that was the first time that I had seen it. That was a long time ago, but at the same time, it's super relevant today. And it was always in the back of my mind. And I've played with using Upwork, or what was it called before Upwork? Anyway, we were on there before Upwork, and things like reporting. Like I need to know, like I need someone to go in and find all the bits of information and put it in one dashboard for me, because our systems don't talk to each other. So I'd pay somebody once a week, and they'd spend 45 minutes, and they would do that, and they would come back and give it to me. But I had never kind of considered doing it as an executive assistant kind of thing, even though it's staring you right in the face, literally, that would be a good use of time, right?
Right, absolutely, yeah. And we referenced the 4-Hour Workweek in our sales pitch. So yeah,
it's definitely and it's one of those books that just makes your mind expand a bit with, like, things don't have to be A plus B equals C. Like, right. The formula for your business and how you get to where you want to go. There are so many ways to get there. And you kind of do yourself a disservice if you lock into, hard work, show up every day, make stuff, sell it, but you could actually go a million different directions by using and leveraging different services. So I'm excited to hear some more detail and success stories and stuff when I talk with your partner there.
Yeah, and she's the real pro at that. So thank you for allowing me to.
Yeah, no worries. So anything as we're just finishing up here, anything we didn't kind of cover that you thought would be valuable for the business owners that are watching?
Yeah, so a couple of tools. So Profit First, that's great that you reviewed. That's amazing, because that is a game changer. Look up The Power of One, and that is about moving little levers, only 1%, to make a big difference in your cash flow. The Power of One. And also look up Cash Conversion Cycle. And that is about taking all the pieces of your business. So your purchasing, your AP, your AR, your collections, take your sales process, and saying, how can we go from A to Z and shorten up those things? Because then you can take on more business, which is increasing your cash flow, but you're also becoming, more efficient through it. So the cash conversion cycle is something to look at, and how can you take those elements and shorten all those cycles to be more efficient would be very helpful for cash flow. So I recommend, there's tons of tools, but I recommend those particular ones.
And how often do you think people should be reviewing their cash flow?
Every month.
Just every month, or more than that? Or?
Yeah. So you review the whole the whole cash conversion cycle is every month, right? How things are going. We look at cash flow on it's almost a daily basis. Yeah. Right. I wouldn't say daily at this point. We're probably 2 to 3 times a week. Just we're watching the trends, right? Okay. And we're saying, how can we make sure that the cash flow is at the very worst staying the same but getting better. So we look at those variables several times a week. Okay. Yeah.
Cool. Well, I think that's a lot for people to jump in and start with. And thank you so much for joining us today. And we'll be posting this, as always, on YouTube and stuff, so that it can be watched as a reference to go back, and people can get started on something and then come back and then go back and go to the next step, kind of thing. So we'll make sure to share that out, and we'll make sure that your company name, what's the best way to get a hold of you? Is it just your website or through Facebook? Or
well, to get a hold of me, you can go to nick.thompson at VEA Pros, VEA pros.com. That's my email. You can go to veapros.com if you like, but feel free to reach out to me personally.
Cool. Well, we'll make sure to put those links on the Facebook video as well, and in the YouTube thing, and on the podcast, because we're doing the podcast thing too. So people can listen to this while they walk their dog or drive in their car and that kind of sort of thing. So yeah, reach out to Nick if you have any questions and you want to find out more about what they're doing and maybe how they can help you grow your business. And thanks, Nick. Really appreciate your time today.
Thanks for having me on. That was super fun.
Yeah.
Take care, Jennifer.